Well, Wall Street traded in a tight range on Wednesday as investors balanced the hope for full economic recovery with continued support, of course, from the Fed Reserve and inflation concerns. For the latest, let's head live to the US with Michelle Schneider from Market Gauge. Hello, how are you today?
Great, Adrian. How are you?
Yeah, going really well. The markets have been calmed, it seems, by part of what Powell has had to say over the last couple of days. I think we spoke last week and they were not calm at all, so it's sort of changed here. But what are you seeing, with some of these comments, and are you thinking optimistically at the moment? What are you seeing?
Well, it's really hard to ascertain all of the comments because Powell says one thing and then Bullard says something else, or one of the other Fed chairmen say something else. And really, so right now it's very unclear on whether or not they're on the path looking at inflation and therefore will raise rates and start to taper down in terms of their bond buying, or not. Or is Powell really going to be reigning supreme in his concern about the labor market, and where is the economy going in terms of growth once we get back to work that fully is played out? And that's what's giving the market some choppy conditions. And actually underlying, even though tech, NASDAQ has done very well, growth stocks have taken over value, that's not always necessarily a great thing. So if we sort of dissect what's going on here, what we're seeing right now is the transportation sector, which is very key to the whole picture of economic growth, is well underperforming. We're seeing the growth stocks gain, but at the same time, the major mega cap stocks have their own issues. They've gone up to new highs, and now you have antitrust coming up. So it was really some of the more beaten up tech stocks, the newer stocks, or what I like to call the pandemic darling stocks, that have now taken the center stage. People are looking at technology to save the day, but as we all know, if there's any real hint to the fact that we're having an economic slowdown, regardless of what anybody in the Fed says, unless they stay extremely accommodative, what we're seeing in transportation could be an early warning sign, or the fly in the ointment, so to speak.
Do you think at the moment, do you have any concerns that the market is, running a bit too hot at the moment? I think there have been certain commentators out there who have suggested that we are coming to a point where it could really take a significant hit. Of course, that's just all up to people's opinion. No one necessarily knows. But how much concern do you have that something could be around the corner?
Well, I am concerned because I am a big watcher of the inside sectors that really give you the true representation of what's happening in the U.S. economy. So if you're looking right now at transportation as the key, that's one level that's underperforming. The small caps are doing okay, but they haven't followed the S&P 500 or NASDAQ into new high territory. Retail is sort of teetering there, so it's a very mixed bag. So then we have to look at the outliers. So what are they telling us? We're still seeing the robust bond buying, that's for sure. But the yields are trying to figure out what they want to do here. If you look at the long treasury bonds, the 20-year plus treasury bonds, they're holding, but on the same token, they're also showing that there is fear there, because typically, if the market is doing really well, people do not go into bonds for safety. So it's a very mixed bag, and when you get that kind of diversion, one little catalyst, whether it be a statement from the Fed or some other type of situation, whether it be geopolitically, et cetera, the dollar going up strong, any of these things can be like a house of cards. So I would say whatever you're doing here, make sure you really understand your risk parameters.
Let's have a look at Bitcoin and Ethereum in particular. Bitcoin is now at about 33,500 there US. So it hit, I think, well below the 30,000 mark over the past 24 hours. We've heard, the China change when it comes to Bitcoin mining there. So what do you need to see moving forward, and what are your worries around Bitcoin in particular?
Well, as you know, we've talked in the past, and I've been very friendly to Bitcoin. And of course, in the longer term, I still am. But yes, the China news was definitely a blow, because 65% of the mining of Bitcoin happens in China. But as innovation goes, we're starting to see more and more stories emerge about other places trying to figure out how to mine. For example, there's a Pennsylvania company that's doing something really innovative in that what they're doing is they're taking waste coal and they're using that for electricity to mine the Bitcoin. So the more we see of that, money going behind alternative ways to mine will be a positive. But right now, with that level of volatility that just came in, and even though we said there was a massive exodus of institutional investors, it really was actually very small compared to the market cap. We have to see what happens right here. I wouldn't jump right in, because even though we had this great reversal from 27,000 back up to 34,000 really very quickly, it settled below that level, so it needs to find a new base here. So I would really have a little bit of patience right now until we can see some level of volatility go away and we start to see more bullish stories emerge. But again, longer term, there's no doubt that Bitcoin is the future and blockchain technology is the future.
And so just a brief one on Ethereum, it's below, it's moving back up 4% now, so it's getting closer to that 2,000 mark, which is the mark that you want to see it get back to?
Absolutely, that is exactly right, Adrian. 2,000 now with support now turns out to be resistance, and so we need to see that get back over there. And also if it dips, I would love to see it go down to 1,400, because that would be a really good place, I think, to go long. So right here you're in chop fest, and I would probably again stand aside.
Very good. Great to chat as always. How can we check out all your work? I know you're doing some daily updates over there as well on the social medias.
Market Minute on Twitter, Ms. Schneider on LinkedIn, and also Instagram. And of course, if you go to our website, marketgauge.com, you'll find all content there.
Great stuff, Michelle. Enjoy the rest of your day over there. We'll talk really soon.
Thank you so much, Adrian.